Coming up on Market to Market, disaster season puts a heavy burden on government coffers. And the crunch of a new apple is heard beyond the edge of the orchard. Those stories and market analysis with Naomi Blohm next.
And so if you look at the soybean market.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, November 3 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. A majority of U.S. citizens don't approve of the job President Trump has done in Washington, but the economy says otherwise. According to the Department of Labor, the unemployment rate fell to 4.1% last month, a 17-year low. Job creation hit 261,000. Economists had anticipated a higher number as the nation got back on its feet after 2 hurricanes. The Creighton Mid-America Business Conditions Index rose for the 11th straight month, indicating healthy economic growth for the next 6 months. And the Fed left interest rates alone. However, the odds-on favorite is for a December rate hike. The Republican tax plan introduced this week eliminates the estate tax along with deductions for state and local taxes. If adopted in its current form, $1.5 trillion will be added to the already burgeoning $19 trillion national debt. As the details are hammered out, damage estimates from recent natural disasters may hit $330 billion, more than double the bill for 2005's Katrina and Rita hurricanes. The tally brought cash-strapped agency administrators to the Hill. Paul Yeager has the details.
2017 may be known as the year of the disasters. Hurricanes like Harvey, Irma, and Maria, plus wildfires that lambasted the West, have left unprecedented destruction in their wakes. The Federal Emergency Management Agency's Administrator Brock Long told a Senate panel this week FEMA has authorized 25 fire assistant grant declarations. To date, wildfires have charred nearly 9 million acres in almost 53,000 fires, which are both ahead of the 10-year average. Also, during a 25-day stretch, the agency and its partners deployed tens of thousands of personnel across 270,000 square miles in 3 regions to assist in hurricane response, which have impacted about 8% of the entire U.S. population. Rebuilding will take time, and right now, FEMA is spending about $200 million a day on emergency response.
We must ensure that the federal government is meeting the needs of the survivors of these disasters, and at the same time, ensure that federal funds, as the chairman has said, are being used efficiently and effectively. Every dollar wasted is a dollar that won't be available to help other Americans who are still in need.
Puerto Rico, one of the heavily damaged areas by recent hurricanes, has experienced another storm, as Long told the Senate Homeland Security and Governmental Affairs Committee about the monumental task of restoring power in the U.S. territory.
The age of the infrastructure on Puerto Rico, I believe the power plants was close to over 40 years average age. Worldwide, the average age of power plants is about 18 years. So there's a big discrepancy there.
Private contractor Whitefish Energy Holdings was recently awarded a $300 million no-bid contract, has come under fire for their lack of experience and being based in the same hometown of Interior Secretary Ryan Zinke. At the beginning of the week, the Montana company's CEO said he'll seek to cancel the contract.
Here's what I want to know about. It's a 9-member board that I should be tickled pink that they gave a contract to a company in Montana, but as you look at the situation, 2 people, been in business 2 years, never done disaster work before. What kind of people are on this board? No bid contract. I mean, I got to tell you something. If it was any of you guys, if it was you, Brock, I wouldn't have started out saying you're doing a great job. I'll tell you that, okay?
There were many things wrong. There was also language in there that would suggest that the federal government would never audit whitefish, which there's not a lawyer inside FEMA that would ever agree to that type of language.
For Market to Market, I'm Paul Yeager.
It is believed there are more than 7,500 apple varieties, some for cooking, some for cider, and some for afternoon snacks. Delicious, the old lunchbox standby has been given a run for its money by Gala and Granny Smith. As the market share battle for so-called healthier snacks continues, apple growers are looking for the next big thing. Peter Tubbs has a look on the other side of the orchard gate in our cover story.
200 apple growers and industry representatives have come to a field day in Prosser, Washington, to get a glimpse of an apple most have already committed to growing, processing, and distributing. Its hybrid name is WA38, but the public will know it as Cosmic Crisp.
That apple is extremely grower friendly. It sets itself up well in the tree on either spindle, wall trellis, V-trellis, what have you. It's going to be way easier to deal with than the Honeycrisp and a way better keeper.
The rollout of Cosmic Crisp is a first for the apple industry in that it mimics the introduction of many packaged foods. Apples are introduced to growers every year by university research farms, but this is the first time an apple has been taken through taste tests and focus groups before introduction. The audience data assured processors and wholesalers there is a market for the new apple.
When a grower is deciding to plant a new variety, feel only so comfortable with taking on a huge amount of risk with a new investment. The good thing about this sort of situation is that that risk gets spread out through a whole industry. So more emphasis can be put on to everyone collaborating and having their own orchards of this new variety so that there will be a huge amount of volume rather than a small amount trickling into the market over a long period of time.
The apple breeding program at Washington State University developed WA38 over 20 years, winnowing down an initial group of 40 favorable varieties to 2 that had commercial potential, WA2 and WA38. A crunchy and juicy apple, WA38 was more grower-friendly than Honeycrisp, which is prone to rot, mildew, and sunburn in the field, and possesses a thin skin that leads to punctures and bruising during processing. Leaving half of a Honeycrisp crop in the orchard is a common occurrence. Cosmic Crisp avoids most of these issues and brings new advantages to the industry. Outside the orchard, the apple stores for 12 months without special measures like a low oxygen atmosphere and is extremely slow to brown once cut.
So from a consumer perspective, really, it's just a great eating apple. You know, I mean, ultimately, that's what the consumer wants. Most consumers key in on textural traits initially, and Cosmic Crisp is crisp, obviously, hence the name. It's also extremely juicy, and so it's one of those really nice apples that gives you that fantastic mouthfeel and the refreshing kind of juiciness that you get with an ultra-crisp apple type.
Dozens of varieties, some heirloom, some hybrid, are grown by individual orchards for the specialized apple market for audiences that prefer something unique. The potential of Cosmic Crisp encouraged the researchers at Washington State University to bring the entire supply chain to the table for the rollout of the new apple variety.
We've created a marketing advisory board made up of all of the main sales and marketing groups, and once they got on board, they felt compelled to get behind this.
Exclusivity helped bring growers on board. Cosmic Crisp will only be grown in Washington for 10 years to give growers time to recoup their investment before the variety goes global. The apple breeding program at Washington State will see a revenue stream to fund future research by charging $1 per tree start and 4.5% of the wholesale sales of Cosmic Crisp apples grown in the state of Washington.
Cosmic Crisp harvests in what has typically Red Delicious season. So many growers have been looking for something that will replace Red Delicious in terms of their harvest portfolio.
It is expected that Red Delicious trees, a variety that sees 85% of the U.S. crop exported internationally, will be the first to be replaced with Cosmic Crisp, with other older varieties like Cortland and Braeburn to also lose acreage. The goal is to join Gala, Fuji, Granny Smith, Golden Delicious, and Honeycrisp as the apples Americans most consume. Grower and packer interest is expected to make the rollout of Cosmic Crisp the fastest the industry has ever seen. The last major apple variety to be introduced, Pink Lady, required 15 years to reach 1 million trees in the ground. Cosmic Crisp is expected to double that number in only 2 years. Interest in Cosmic Crisp has been so strong that a form of lottery was held to parcel out the initial tree starts. Few orchards got as many as they wanted, but most got enough for a dedicated section of their orchard. Roughly 700,000 trees were grafted in 2017, with another 1.3 million planned for 2018, making it the largest apple tree introduction ever. Cosmic Crisp apples should begin to appear in West Coast markets in 2019 and expand nationally in 2020.
If you want to talk about the old Red Delicious and where that went and its sellability through the state of Washington way back 30 years ago, this is the new Red Delicious, but 10 times better.
Growing the better apple won't come cheap. Converting an orchard to a new variety like Cosmic Crisp can cost $35,000 per acre. Using high-density trellis systems, less than 1,500 acres statewide will be needed to start 2 million trees, but at a cost to growers of over $40 million. Time will tell if consumers will find room for this new apple in their shopping carts. From Market to Market, I'm Peter Tubbs.
Next, the Market to Market report.
Bulls running through LaSalle Street midweek had some wondering if the bottom was in, but the market appears to have done a head fake. For the week, December wheat lost 2 cents while the nearby corn contract was flat. Export sales and positive technical signals made for a volatile week in the soy complex as the January soybean contract finished even with last week. December meal gained $1.80 per ton. December cotton stretched an additional 52 cents per hundredweight. Over in the dairy parlor, November Class 3 milk futures fell back a dime. The livestock complex finished in positive territory as the December cattle contract put on $6.47 and nearby feeders moved $5.58 higher. The December lean hog contract added 65 cents. The U.S. dollar index tacked on 4 points. Crude oil continued its climb above $50 again this week, jumping up $1.74 per barrel. COMEX gold declined $2.60 per ounce. And the Goldman Sachs Commodity Index bumped up nearly 9 points to finish the week at 420.75. Here now to lend us her insight on these and other trends is one of our regular market analysts, Naomi Blohm. Naomi, welcome back.
Thanks, Mike.
In case you want to go over things again, you can download or listen to our Market Analysis and Market Plus podcasts online anytime at iptv.org/MTOM. Naomi, let's talk about this wheat market. Are we confident that we're establishing a pretty broad-based bottom here in the Chicago wheat?
I feel strongly that it is trying to do that. It's going to take a while before the market has any reason to rally. We just don't have that news. Stepping back and looking at the global picture, we have found this week that the Russian total wheat production is up almost 15 million metric tons from a year ago, and they have had a triumphant export market as of late. But then if you look at the Australian production, it's actually down the 15 million metric tons, so it kind of offsets each other. I didn't realize how much in the United States production is supposed to be down this next year for the winter wheat. And the early thoughts are that Kansas production and acres are going to be down 10%, with Oklahoma doing the same thing.
Wow.
So that is significant, which the market won't trade on yet because the global supplies are still so big, but that's one of those pieces of news to be mindful of as we head into 2018. So again, we don't have any news to get that market to rally. but it's really trying to find a bottom at these levels.
At these levels, when you talk about the Russian crop growing and they're being able to export it, given the change in the currency, at these price levels, are we at a level where we're going to start shrinking some of that other acreage around the world here in winter wheat particularly?
That's a great question. I'm not sure. Something to be watching. There's other crops that are more profitable, yet, you know, wheat, people seem to enjoy it. It can be grown anywhere in most conditions. So I don't think you see the global acres reduced dramatically, but it really is telling that in the United States, that 10% reduction for those two key states, that was really insightful to me this week.
All right. Now let's talk about the corn market, Naomi. We're 2 cents on the other side of $3.50 this week. It seems like we are still stuck in that range.
Yeah, right. 3 months now.
3 months. I mean, come on. We got to bust out of here at some point, right?
You would think so. So coming up for the corn market, we have the USDA report next week, the WASDE report. Many are expecting corn yield to be increased. So some numbers came out this week of like 173.5. That was up from the 171 number that the USDA has right now. To me, that seems aggressive based on producers that I'm talking to. They're definitely saying it's not as good as last year. Of course, better than they thought over the summer, but it just seems like an aggressive number. So I would say that that's been priced into the market right now. And we need some fresh news, obviously. The funds are short 202,000 contracts right now. The most that they've ever been short is 224,000 contracts. So seasonally, looking at the funds, we think we're at the bottom here, but we need another market catalyst to get it going. And hopefully, maybe it's going to be the soybean market that gets things to go. But with the corn market, we still have about probably 30% of the crop yet to harvest, and the weather's not fantastic. So the slow drawn out harvest might help just keep the market price supported.
Okay.
But we're stuck. We're stuck.
Just still stuck. Now, you mentioned the WASDE report, which is coming up on Thursday, and we've got a question here from Brian in Bald Bluff, Illinois, on Twitter at Brian Book. And Brian wants to know, what number, yield-wise, do we have to get to in corn to see less than 87 million acres planted next year? Are you already having the next year's planting discussion with growers?
Not really, no.
Okay.
They're really, I think with the harvest being behind so much, they're just focused on that primarily, and they're just trying to catch their breath. I would give it a couple more weeks, and then we'll start to have those production numbers happen. But the bigger thing in this whole market is going to be what the soybean marketplace can do in the coming weeks and the coming month, and that's going to set the tone for 2018. Beans are the leader. Beans are going to be the leader. The soybean action is where it's at.
So let's talk about it. Soybeans up 2.5 cents in the Jan contract on the week. That doesn't seem like a whole lot of action, Naomi.
No, it's not. And Darren Newsom pointed something out really great on Twitter this week about a chart, how the marketplace for soybeans has just been trapped for prices for a good year, even longer. And what's happening right now is just that delicate balance of supply and demand, and the global demand is triumphant right now. And there's about 5 different things in the soybean marketplace that I'm really focused on. And in and of itself, each of those market little fundamentals isn't enough to make that market move. But if all of those 5 things suddenly tip to friendly, the bean market is going to just accelerate to the upside. The market has some really good support right now. So here at home, we're going to probably see yield reduced next week on the report and get us probably closer to that 48 number, the trend line number that I think is legit. That keeps the ending stocks even a little bit smaller. We keep seeing on each report, the ending stocks get a little bit snugger and snugger and snugger. I think you're going to see that continue. Our crush numbers have been strong. Exports still solid and ahead of schedule. There's thoughts that China's going to be needing to import for fourth quarter even more beans than what people are anticipating. And of course, Brazil is going to be there to capture some of it. But we're looking for even possibly stronger exports in the coming months. Now, also new this week was that Argentina is having weather issues. It's too wet. So production is supposed to be down maybe 5%. And so it's all these little things that they're going to set the stage. And I think you're going to probably see the market work higher. But how high it can go into 2018 is absolutely critical on that marketplace in South America. They grow half of the world's beans. So that's what we have to watch going forward is South America. But what I really strongly feel is that with the demand as good as it is, the market has found its low, and we found some support. But how high we go just depends on the production in South America.
All right. Well, now, Naomi, being the Wisconsinite, we need to pick your brain here on the dairy market. can't seem to catch a break. We get up north of $16. We start pushing 17, and then it falls apart right back down to the mid-50s on these deferred months. Where's dairy going?
Not much of anywhere is the answer.
Okay.
There's two different things happening. The front month contract is really trading what's happening with the cheese market. That's why the front month contract gets up to the $17 area and gets exciting. Cheese demand is strong. Cheese disappearance in coolers is getting smaller. The block barrel price got up to $1.75, and that's a pretty substantial move for cheese prices, and the market reacted to it. You saw higher milk prices earlier in the week. But then the deferred contracts can't rally, and the reason is because production is so huge. We had the most recent milk production report, and again, up another 1%. So there's so much supply out there. And our overall milk, dairy exports, it's up 2%, but we've got no problems with production. So you're going to see the deferred contracts continue to struggle for right now, probably stay between the $15, $16 level, and sit and wait to see how exports are and how cheese is going into the holidays.
All right. Well, now we got to talk about the livestock market. Really, one of the few bright spots is the cattle market this week. Cash cattle trade was strong. Naomi, does this carry on another week?
That is the question we're all wondering. So it was pretty amazing last week when Friday after the market closed, the cash cattle was like, whoa, 117, 118. And then yesterday on Thursday's close, the futures market gave the most textbook topping signal ever. A bearish reversal on almost all of the contract months. But then the cash market had the last laugh.
That's right. And Friday we saw limit up in some contracts.
So 125 was the talk of cash cattle in Texas. And so, yeah, Friday's trade limit up because the market is just saying that the demand is there right now. And it's a demand-led market. What's interesting is that the cattle coming in for slaughter, they're down like 19 pounds from year-ago level in some places. And so the numbers are there. We've got the supply. It's just that the packers, I think, were caught short. And so there's extra holiday demand coming up. The economy is really good. So I think people are enjoying themselves, and that's great. It's great, but just remember, it's a demand-led market. And once the holidays are done, my fear is that you see the market set back lower. So I would take advantage of these and get as much as you can done to protect these prices.
And you're even looking out through first into the second quarter of 18?
First quarter for sure.
Okay.
Second quarter.
We're getting a little stretched out there.
Yeah, because that demand is good, and as long as the global economy is good and our exports for beef are up 11 to 14%, depending on, it's a demand-led market. So it's good, enjoy it. But don't be complacent like it's going to be here forever, because if it falls apart on the demand front, then watch out.
Now, if we continue to see this kind of excitement, cash cattle bid stronger and stronger, corn's in a range, are feeder cattle going to go nuts this next week?
That is a great question. I was thinking about that too. So feeder demand is strong. Corn price absolutely cheap, but like the cattle market, the feeder market has really accelerated and extended to the upside. You might see a technical correction on charts, or the futures have a setback or correction, but as long as the cash demand is so strong, you would think that the feeder market holds up too and stays at a nicer value overall.
Yeah. As long as the cattle feeder has money to spend, he's going to spend it on feeders, you would think.
So, yes.
Now, the lean hog market, we talk about this every week. It's that Cinderella story where, so many hogs are coming, and yet we're putting in, not new highs by any stretch, but certainly strong numbers, another 65 cents higher this week on the front month. Yeah. How much longer can this go on?
I don't know. The hog market is baffling to me right now. Cutout values have been leading the way. And the cuts of hog, when they're going out to the market, it continues to be that belly market that leads the way. But of course, who doesn't like bacon? So hello. But it is a triumphant price rally in the wake of extra production. But a lot of those plants are coming online now, the 2 new plants, and so they're getting them filled up. I would also say it's holiday demand. Our exports are surprisingly ahead of a year ago.
Mostly going to Asia, is that where? Okay.
Yes, and so again, it's a demand-led market right now. Supplies are plentiful, so anytime you see a rally, I think it's a hedging opportunity. So unless there's another like PED virus or something that would break out this winter and there's actual production issues, anytime you see a rally, make sure you're capturing it.
And again, how far out do you want to be capturing a rally in the hog market?
Well, right now it's got like a normal, for lack of a better term, like a carry to it, which is normal for this time of year. And so I would capture that out through the first quarter and then, just kind of give it a little time to see if the demand is able to hold for the short term, especially as we go post-holiday. But from a mom perspective, there's a lot of new pork recipes coming out. So it's really exciting. So I'm actually cooking more pork at home too. So
fantastic, leading the demand drive. Thank you much, Naomi Blohm. Well, that wraps up the broadcast portion of Market to Market. However, we will keep the conversation going, including answering more of your questions and maybe get a recipe during Market Plus, available in podcast and video form on our website. Sometimes 140 characters is all you need to keep connected while in the combine. Our Twitter feed of @MarketToMarket is here for news, photos, and links, so give us a follow. And join us again next week when we'll see how North Dakota farmers handled the wicked weather cards they were dealt. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.